The rate cuts backfired. Hey, everybody, we're going to talk about that and more. Welcome to Bull Boom, Bear Bust, back with another dose. BX4 back in the building. Please make sure you are subscribed. Big things are going to be happening in the coming weeks, in my estimate. And we're talking about political upheaval, social upheaval, other financial economic news today. Insiders selling hits a 3-year high, and that's insiders in the U.S., corporate insiders. Why would they be selling at a 3-year high? What do they see? What do they know? We're going to get into that and more. Let's go ahead and get started right here. 20% of households making over $110,000 are living paycheck to paycheck. Bank of America has an interesting report on who's living paycheck to paycheck. It's not just the poor, folks. This is what so many people do. They want to get maximum credit or take out the maximum loan they can get. Right? If you're approved for a $50,000 car loan, odds are you're not going to get a Kia or a Hyundai that's 5 or 10 years old. It's just the way it is. It's just the way people are. If people have credit, they want to look like they have credit. They don't want to look poorer than they really are. When really looking poorer or more poor than you actually are, that's probably the safest thing. You'll be less likely to get carjacked. You'll be less likely to get robbed. And basically you'll be safer. But nobody wants to look poorer than they actually are. People want to look more wealthy than they really are. They want to show off, right? They want to show out. So it's no surprise that people making 6 figures plus, a lot of them living paycheck to paycheck. No surprise to me. Does it surprise you? Let me know. It doesn't surprise me at all. Anyways, we got a lot of other stuff to get into today. Rate cuts backfired, folks. We had the 50 basis point rate cut, and that was supposed to be dropping rates in general, borrowing rates, but it did just the opposite. Long-term rates and mortgage rates actually increased. Why is that happening? Well, a lot of countries now, they see a weakening dollar. They see a weakening dollar continuing. And what they're doing is they're dumping debt, and that makes yields rise. Also, you have good economic data, perceived as good. It's really not good. It's perceived as good, like the jobs numbers, pointing to less rate cuts. Because if jobs numbers are strong, and we know a lot of the jobs numbers are very deceptive because it's people that lost their jobs that are re-entering the workforce, people getting second jobs, and some of the numbers are just cooked up. And then also a lot of government jobs thrown in there. We know the jobs numbers way deceptive, but it was a strong jobs number, perceived strong jobs number, that also had people feeling like the Fed would be less likely to cut rates. So remember, markets are more anticipative than they are reactive. Now, of course, the markets will react when something big happens, something major, like a black swan or something. But mostly markets are forward looking. So the talk of rate cuts, remember the Fed, they were talking about rate cuts ever since midsummer. I think I remember as far back as maybe late June, early July, talking about rate cuts. Rates fell, mortgage rates fell. But look what's happened since the rate cut with mortgage rates. Take a look here to the right side of this chart here. And just over the past few weeks, folks, mortgage rates jumping back up to about 6.8%. We also had the 10-year yield reaching a little over 4.2%. Again, just the opposite of what they actually wanted, especially this close to November. So it's pretty interesting. So we're going to see, I think this continue to play out. You're going to see it drop and go back up eventually because the threat of the long-term weakening of the dollar. Remember, low rates weakens the currency. Of course, if you compare the U.S. dollar to other world reserve currencies or other fiat currencies around the world, not reserve currencies, but fiat currencies, you're going to see the dollar holding up still pretty strong. But remember, it's comparing it to other fiat currencies. Look at the fiat dollar compared to gold, compared to silver, and you can see why gold and silver prices have been skyrocketing. By the way, that reminds me, I think one or two of you on this channel was saying that silver did not outperform the stock market because I said silver was one of the best investments over the past year or two. Folks, I haven't seen too many housing markets that have went up 40% in the past year and a half. But silver has done that. And let me just bring up a chart here. And now that I'm looking at it, it's even a bigger gain than 40% here. So just in the past year, this is a 1 year chart here, folks. Silver, right around the $22 range, $23 there in February. Now, folks, we're up around $35. That's an increase of over 50% as far as I could see here. So I don't know too many housing markets that went up 50% in the last year. So some of the people down here making these comments, I don't know where they're getting their data from. I'm sure if you looked through thousands of zip codes in the US, you might find a couple housing markets or areas or zip codes that prices went up 40, 50, 60% in real estate. And maybe because of a few, small number of transactions that were high on the high end of the market, so to speak, that kind of pushed up the median sale price. But folks, I don't know where people are getting this stuff from here, folks. Silver up over 50% just in the past year if you would have bought there in the low 20s, which was, again, not that long ago, back in January, February, March of this year. And I expect a little bit of a pullback. I mean, this recent surge on this chart here going from just under 30 to almost 35, that's pretty far, pretty fast. But then again, crazier things have happened where prices have spiked in a shorter amount of time. If there's a panic out of the dollar because of what the BRICS nations are coming up, here this BRICS alliance meeting, what is said out of those meetings, what is brought up could have an impact on this and could cause people to panic and flee into a more sound currency, in my opinion, and precious metals. It could also cause more US dollar denominated debt to sell off, causing spiking rates. There could be a massive dump of US debt in what's called the Operation Sandman. Some people are calling it. Is it a theory? Is it real? Who knows? But we're going to find out here in the next few weeks. But back to one of the things I talked about at the beginning, I see a lot of political upheaval coming up here, some social unrest. I don't think that either side is going to accept a loss. I think they're going to say the other side, cheated and whatnot. I think there's going to be some very, very dangerous situations arise out of this. And I don't think November is going to be the end of it. I think we're going to see some stuff drag out for weeks, maybe even months. So be ready for that. I went out and got some extra canned goods here recently because I just feel it. I feel it in my, I don't want to say I feel it in my bones, but I feel something out there. I feel something on the horizon before the end of the year. And I've said here, October historically has been a month where a lot of things happen, a lot of red market days or red months in the market, what they call red October. So we're going to see. I would just say be cautious, prepare, and be ready for anything. And then if it doesn't happen, great. We can all just move on and move along. But if it does happen, you're going to be glad that you had some preparations, especially if we see a shutdown, an outage, or a cyber situation pop up where we see a massive outage nationwide, or maybe just in your city. Either way, just be ready, folks. Some other news that I wanted to get into today. Rents keep rising. Wonder why that's happening. Well, we've talked about it here a lot. Now, we did mention some areas that we're seeing falling rents year over year. I think maybe 4 or 5 reports ago we talked about that, but mostly in Texas and Florida because those prices got bid up very quickly as people surged into those states after the health crisis. But actually overall, when you look at the nationwide, all the major markets, rents are up 3.3% year over year amid low inventory, right? So we've got a surging population, people coming here from all over the world, not building homes or apartments nearly fast enough to keep up with the rising population, folks. So it's just natural. It's just supply and demand, folks. There's no other way around it. So this is going to continue. I don't really see things change. Well, things could change as far as the population surge. And, there could be some price swings because of that. So there are some, I guess you could say there are some political things that could cause some differences in certain areas, including rents and housing. But overall, the monetary system, I don't see a lot changing except for the de-dollarization that's happening with the BRICS nations that could cause, again, rising rates when they meant to drop rates, rising rates. But if the economic data doesn't support rate cuts, then what are they going to do? So if these jobs numbers that they're saying are strong continue to be quote unquote strong, will they be less likely to cut rates, right? So it's getting very interesting. A huge outbreak of E. coli from McDonald's. And that's pretty interesting. Just a day or two after the ex-president went there and did the photo op with the fries. So, is he bad luck or what? I mean, look what happened under his watch in 2020 with the global health crisis. People are starting to ask that question. Folks, speaking of rising costs and high home prices, look at this out of Vox. What if cities finally legalized adult dorms? Experts think they've cracked the code to how to actually convert empty office buildings into affordable housing. So we've talked here before about how expensive it would be to convert a lot of these vacant commercial buildings, office buildings into residential. So what they're talking about doing is just having dorms where people just share like one common bathroom in the hallway. Maybe you'll have your own bedroom, maybe not. Maybe it's a bunch of bunk beds inside of a large office floor or something like that. So pretty interesting. It could look like a military bunker where you just have a bunch of beds inside of the same room. So it would be interesting to see, though. I think a lot of adults would probably take advantage of that. But it would be kind of weird, wouldn't it? Sleeping with a bunch of strangers in the same room. Eventually you would probably know them. But when I think of a dorm type of living situation, that's what I think of. I mean, let me know if you think that's actually going to work. But they're actually talking about cities that are discussing the topic of turning these vacant buildings into a dorm living type of situation for adults. Folks, still on the topic of the housing market, we've got, in my opinion, crazier things happening now than we did prior to the 2008 housing bubble going bust. Prior to the run-up at that time, I think things are even crazier now. Look at this. Down payment assistance programs all over the place here. Connecticut resumes time to own down payment assistance program, $40 million worth of funds. Another one there. Just in the past 24 hours, several reports of re-emerging down payment assistance programs. And of course, we know about the $25,000 down payment program nationwide that'll be implemented under Miss Harris, or at least that's what she says. But look at this. U.S. down payment assistance program count hits 2,444, over 2,400 down payment assistance programs in the United States, right? So like I told you before, thousands of cities across the U.S. helping people get into homes because homes are unaffordable without it. Sales are already low. Sales are at a multi-decade low as far as what I could see in home sales in most areas. How much lower would sales be without all these, again, over 2,400 down payment assistance programs? And then would prices actually start dropping more if it weren't for all these down payment assistance programs? And lots of other things too, lots of other pieces to the puzzle here as to why the housing bubble has not went bust. And we've talked about them here numerous times, but just to name a few: investors buying a lot of real estate, the government buying more mortgages now than before, way more than 2008. The government coming in buying all these FHA loans, these government-backed loans. Folks, if something doesn't change, I mean, this is going to be just housing inflation nonstop. Where does it end? And it's not just me saying that anymore. I mean, there's lots of articles out now about it, about how investors are buying up so much property here. 1 in 2 homes in California here is owned by a real estate investor or a landlord, meaning only 1 in 2 people actually own their home. And of those people, only 1 in 5 have their mortgage paid off. So most people are either 1, renting, or 2, paying rent to a bank. But even after that, you're still paying endless or never-ending rent to the government here. But look at this here. How billionaire investors are disrupting the U.S. housing market, right? Another article. You see these articles now, several of them coming out every week, all right? A couple other things, though, here. Florida residents are seeing huge numbers of people getting denied for their hurricane claims. Now, we recently saw Debbie back in August. Then we had Helene. Then we had, what was the other one there? Milton. And pretty shocking here that 77% of claims denied by Florida's largest property insurer, that's Citizens Property Insurance. Citizens Property Insurance has denied 77% of claims related to the hurricane from back in August. Now, they're still settling the more recent ones, But if this happens now in these recent hurricanes like it did from the one in August, close to 80% people, 4 out of 5 people approximately being denied for their claims. And insurance companies have ways to not pay out a claim. For example, bring up a picture here. A picture like this, floods. Folks, that is a separate coverage with most companies. If you don't buy it, kind of like earthquake coverage, if you don't buy it, you're not covered. Even though it's a hurricane, when you hear hurricane, you think of winds, right? Winds are usually covered under a insurance policy, tornado, hurricanes. But when water gets involved and when the damage is water, sorry, you didn't have flood coverage. You're out of luck, folks. That's why close to 4 and 5 people are getting denied for their claims. Let me stop this commercial here. Same thing with earthquake. Earthquake is a separate coverage. Why is it separate? Because you don't need it in some parts of the country, right? Someone in, let's say, Ohio may not want to buy earthquake coverage. Rarely see earthquakes in Ohio. Somebody in California may want to buy it, so it's optional. But the point is, insurance companies have ways to deny these claims. They'll just say the floods caused it. You didn't have flood coverage, even though it was a hurricane. Water damage was what you needed. You needed flood coverage. You didn't have it. You didn't pay the higher price. So now these people are out of luck, folks. And it's going to be more investors coming in and buying these properties, buying this land, again, for pennies on the dollar. And it's going to really make home ownership drop. And you're going to see more, corporate and Wall Street landlords and less mom and pop consumer people owning their home. All right, folks, moving right along. U.S. insider selling soars to 3-year high. Why would this be happening here? And it's a 3-year high. Here's one example here. Just bring this up here to look at. NVIDIA. Look at NVIDIA. As the price skyrocketed this year, insider sales also skyrocketed, right? So the insiders, they know to get out while the getting's good, to get out while the price is up. And a lot of these same insiders wait for the drop, and then they'll buy it back in. All right, that's why you see so much wealth consolidation. Not everybody does this. A lot of people will chase the price or jump into a stock when it's already up instead of being patient like Warren Buffett. He's in, I think, the most cash that he's ever had as far as his percentage of his portfolio. I think it's a record. I have to look it up, but I think it is a record for Warren Buffett and Berkshire Hathaway. And again, why would he be doing that at this time? Is something big about to break or drop, right? Or will we see something even worse? If something doesn't break these markets or bring it down, continued inflation, right? If nothing slows down the money creation monster, you're going to see inflation and hyperinflation ensue here in the following maybe even year or more. Could be as little as a year, though. And in my opinion, that's even worse. That's even worse, folks. So when we see deflation, we also see a huge number of jobs lost because deflation usually signifies money's not being loaned out. So spending crashes. And when spending crashes, it's less jobs, folks. Very simple, right? So again, I think the powers that be would be more likely or more wanting to inflate versus let deflation occur. Rising prices versus falling prices, folks. That's the name of the game because that's an illusion. Rising prices gives the illusion of economic growth. People spend money, a lot of loans being given out, money being pumped into the economy, for lack of a better term, gives the illusion of growth. But deflation, then everybody notices because job losses skyrocket, prices crash, folks. You know the game. Get ready, folks. Keep stacking as always. Please make sure you're subscribed. Very important time to stay ahead of the financial curve. And I would be on the defensive right now. That's just me. I'm not giving advice. It's not just me saying that, though. Look at Warren Buffett, his cash position. Look at the insiders selling. Turmoil is coming in the next, I would say before the end of the year, we're going to see some more craziness. We've already seen craziness this year, so it's already been crazy, but it's going to get even more crazy, folks. I don't know how else to say it. Let me know what you think about all this down in the comments. Let me know, how do you sum up where we're at right now? How do you summarize the state of the world, the state of the U.S., but the state of the world right now, politically, financially, economically, all that? Please let me know down in the comments. And I learn from your comments, so I appreciate you guys being here, sharing your thoughts, sharing your opinions. Am I wrong? or am I on target? Let me know down in comments, please. I'll be reading those. And as always, keep stacking, everybody. Bye for now. Peace.